Hey investors, welcome back to Investment Buddies. Today we're going to have a much shorter video since the last two videos were much longer than usual. So today we're just covering 13 common terms all investors need to know. So let's jump into it. Let's start with assets. Assets are anything of value or a resource owned by an individual or entity, okay, as covered in one of our earlier videos. And assets can be anything from commodities like gold, oil, to land, to savings or stock. That moves us into our second point, stocks. Stocks are a type of security that signifies ownership in a corporation and represents a claim on part of the corporation's assets and earnings. Our third piece is going to be bonds. Bonds are a fixed income instrument that represents a loan made by an investor to a borrower. And this can typically be a company or the government. And essentially, it's an IOU. You pay the government money immediately, and they'll pay you back later with interest. Our fourth term is mutual funds. Mutual funds are an investment vehicle that pools funds from many investors to purchase a diversified portfolio of stocks, bonds, and other securities. Okay? And our fifth term is going to be exchange traded funds, ETFs, a favorite on this channel. ETFs are a type of fund that owns underlying assets, such as bonds, and diversifies ownership of those assets into shares. Now let's move on to a portfolio. What is it? It's a collection of investments owned by an individual or institution or company or firm. Essentially, it's all of your collection of assets, bonds, ETFs, and stocks all piled together. That is what makes up your portfolio. Now, let's move on to dividends. Dividends are a portion of a company's earnings distributed to its shareholders. Interest is the cost of borrowing money on the return earned on an investment. So, if your interest is 0.5% and you spend $100 or you have $100 in shares or bonds, you'll make 50 cents back. Our ninth term is market capitalization. This is a newer term on this channel, and it's the total market of a company's understanding of shares of stocks calculated as stock price multiplied by the number of shares. Our 10th term is going to be liquidity, and that is how easily you can transfer anything from its asset to cash. So the more liquid or more liquidity that a asset has, it's the quicker it can be turned to cash. In other words, commodities such as gold and diamonds aren't as liquid as stocks because stocks can be sold and turned to cash immediately, while gold and diamonds have to be found a buyer and then transferred over. Our 11th term is capital gains, and that's your total profit. And that will also play into our 12th term, which is capital loss, which is your total loss from stocks or the assets you've invested into. And then our 13th and final term is risk tolerance. It's how much you're willing to risk when investing into a stock, bond, or commodity, and how much risk tolerance you have will debate on how much you can lose or how much you can gain. Now, that's the end of this video. If you guys have any more video ideas for the future or anything you want me to cover, drop them in the comments, and I'll make sure to make videos on them in the future. And if this video is helpful to you guys, give it a quick thumbs up and subscribe and tell your friends and family about it. I'll see you guys in the next video.